Welcome to the Deep Dive, where we take stacks of information and, well, try to extract those crucial nuggets of knowledge for you. Today, we're diving deep into the Q1 FY26 results for Borosil Renewables Ltd. They're a pretty big player in the solar glass scene. We've got the official numbers, the company filings, the works, our mission. Cut through the noise. Especially because on the surface, this quarter looks, well, disastrous. But there might be more to it. A kind of strategic double play, maybe? A painful cut on one side, but maybe an aggressive move for future growth on the other. Okay, let's get into it.
Indeed. And you'll find that, while those headline numbers grab your attention, the real story, the why this matters, is really in the details, the strategic choices they're making. We're focusing specifically on the standalone financials for the quarter ending June 30th, 2025. These were just approved by the board on July 23rd.
Okay, so let's start there. The big picture numbers for Q1 FY26. What are the standalone results telling us about revenue, first off? And then, crucially, the bottom line profit or loss.
Well, what's immediately striking, really, is the profit after tax, the PAT. It's a huge contrast to previous periods. The company reported a significant loss, rupees 27,234.57 lakhs for Q1.
Wow, okay. Lakhs, so that's about 272 crore rupees.
Exactly. And compare that to Q4 of FY25, they actually had a profit of about 33 crore rupees. And even Q1 last year, the loss was much, much smaller, only around 3.6 crore rupees. So yeah, a company like Borosil Renewables, seeing that kind of number, it definitely sends a signal.
That's an incredible swing, isn't it? From profit to such a massive loss. Now, when we see something labeled exceptional driving that kind of change, what's your first thought? Is it likely a genuine one-off, or could it hint at something deeper strategically?
Yeah, my immediate reaction to a number that big flagged as exceptional is that it points to a very deliberate, significant one-time event. It's usually not about the day-to-day operation suddenly falling apart. And actually, if you look before that exceptional item, their profit before tax, the PBT, was positive. It was around 66.5 crore rupees for Q1 FY26. But then you factor in this exceptional item, a charge of rupees 32,590.81 lakhs.
So roughly 326 crore rupees.
Precisely. And that flips the PBT into that substantial loss we saw, about 259 crore rupees. So yeah, the numbers basically scream one-time strategic decision.
Right. So while that exceptional item clearly hit the bottom line hard, how did the core business actually do? The revenue engine, was it still running okay?
That's the key question, isn't it? And the answer is yes, the core business seems robust. Revenue from operations for Q1 was rupees 33,226.04 lakhs.
Around 332 crore.
Yes, and that's actually up compared to Q4 FY25, which was about 327 crore. And it's significantly higher than Q1 of last year, which was only around 242 crore.
So decent growth there.
Exactly. The revenue engine, their ongoing operations, looks pretty healthy. The net loss was almost entirely driven by that single very large exceptional charge.
Okay, so let's unpack that. This exceptional item, nearly 326 crore rupees. Where exactly did that come from? What's the story?
Right. This all stems from their step-down subsidiary over in Germany, a company called GmbH Glass Manufacturer Brandenburg GmbH, or just GmbH. Borosil Renewables did an independent assessment, looked at GmbH's situation, and basically concluded, well, that demand just isn't recovering there, and there was no real sign of it coming back anytime soon. On top of that, GmbH needed significant funding every month just to keep the lights on. We're talking around 900,000 euros a month.
Wow, that's a serious drain.
It absolutely was, just continuous cash outflow.
So it sounds like a situation that just couldn't continue. What was the sort of formal outcome of that assessment?
Well, based on that bleak outlook, the managing director of GmbH went ahead and filed for insolvency. This was on July 4th, 2025, with the local court in Germany. It's actually starting the process to wind things down.
Okay, formal insolvency.
Exactly. And because of that insolvency process starting and all the uncertainty around how it would play out, the management back at Borosil Renewables made a decision. They decided to fully provide for their entire financial exposure to GmbH. That includes not just GmbH itself, but also its direct parent company, Geosphere Glassworks GmbH, which Borosil owns entirely.
Oh, okay, so the whole chain.
The whole chain. And that total exposure, investment, loans, interest, other receivables added up to that rupees 32,590.81 lakhs figure. So taking that full provision, writing it all off in one go, that's what shows up as the exceptional item on the P&L statement for Q1.
Right, so they're taking the hit now, a big one. For some people looking at this, seeing a loss close to 380 crore might seem incredibly alarming, even with that explanation.
Yeah.
How do you frame that decision? Is it weakness or something else?
That's a really important point because, yes, it's a massive hit to the profit and loss statement in the short term, But the way to look at it, I think, is as a calculated move, almost like a financial amputation. They're choosing a swift, clean break from something that was just continuously draining resources, even though the short-term cost is high.
Hmm.
So arguably, it could be seen as a sign of strong financial discipline for the long term rather than a sign of distress, shedding dead weight so the core business can move faster.
And that GMB situation also explains something else, why we only got standalone results for Q1, not the consolidated group results. That's important context, right?
Absolute crucial context.
So just to be clear for everyone listening,
Yeah.
seeing only standalone results means we're looking primarily at Borosil's Indian operations, before the full impact of GMB's wind down gets folded into the group's overall picture. It gives us this kind of segmented view.
Precisely. Because that insolvency process for GMB is ongoing, actually preparing GMB's own financials for the June quarter, well, it takes time. So Borosil informed the stock exchanges that the full consolidated results, the group picture, would come later, once GMB's numbers are finalized and can be included. So yeah, what we have right now is a snapshot of the health of their main Indian business.
Okay, that makes sense. So moving beyond the GMB write-off, what else do these standalone results tell us about how Borosil is actually operating? What about their revenue mix, domestic versus exports?
Yeah, the revenue breakdown does show an interesting shift there. For Q1 FY26, the revenue from operations within India was rupees 29,763.59 lakhs.
About 298 crore.
Right, while the revenue from outside India, their exports, was rupees 3,462.45 lakhs.
We're from 35 crore.
Yes.
Okay, and how did that compare? Did exports grow or shrink as a proportion? What might that tell us?
Well, if you compare it to the previous quarter, Q4 FY25, domestic revenue was slightly higher then, around 309 crore, but exports were much lower, only about 18 crore rupees.
Ah, so quite a jump in exports quarter on quarter.
A significant jump, yes.
Yeah.
Almost doubled. And even compared to Q1 last year, exports were only around 21 crore. So strong export growth year on year, too.
That's interesting. Seeing strong export growth like that, it could signal they're deliberately shifting focus, maybe diversifying away from just the domestic market, or perhaps tapping into new international demand.
It certainly suggests a dynamic shift in where their sales are coming from. It could be diversification, could be seizing new opportunities abroad as global solar demand evolves. It's definitely something to watch.
Okay, so with this big GMB write-off happening and the clear intention to separate from it, you'd think the company might look to strengthen its finances, maybe invest more in its core Indian business. Did the board announce anything along those lines?
They did. And that brings us to another really key development in this report, a strategic plan for fundraising.
Right, fundraising. That sounds very strategic, especially coming at the same time as the GMB news. It's almost like they're raising money because they've cleaned house to power the next phase. What are the details?
You've hit it exactly. It feels like a move to capitalize on the clean slate. The board has approved raising funds by issuing new equity shares, specifically up to 7,093,874 new shares. These are fully paid up equity shares with a face value of Ria 1 each.
Okay.
The issue price is set at rupees 535 per share. That includes a hefty premium of rupees 534.
Wow, 535 rupees per share.
Yes, and this is being done as a preferential issue on a private placement basis, specifically targeted at non-promoter investors.
Non-promoters, okay. And what's the total amount they're looking to raise then?
The aggregate amount is quite substantial, rupees 379,052,022,590.
So nearly 380 crore rupees. That's a significant amount of capital.
It really is. And like you said, this isn't just about patching up the balance sheet after the GMB provision. Raising this much capital, especially from non-promoters, it could be seen as a strong vote of confidence from investors in their future. It potentially fuels, maybe aggressive expansion of their core Indian solar glass manufacturing or other strategic initiatives.
A big vote of confidence indeed. And when are they looking to get this approved?
They're holding an extraordinary general meeting, an EGM, on Thursday, August 14th, 2025. That's when they'll seek shareholder approval for this preferential issue. And interestingly, the list of potential investors, the proposed LLTs, includes up to 82 different names, so potentially broad interest.
That is a significant move. And didn't we see something in the notes about prior fundraising being used for GMB debt?
Yes, that's right. Looking back at the financial statement notes, there was a previous allotment back in February 2025. From that, about 185 crore rupees, or 18,500 lakhs, was actually used to settle liabilities related to GMB's lenders. So this new fundraising really underscores their focus now on strengthening their own financial position and, well, charting a new course forward, post-GMB.
So putting it all together, This deep dive really shows a company navigating some pretty complex waters, but seemingly with a clear plan. You got Borosil Renewables making this decisive, quite painful cut from the German subsidiary, taking a massive one-time hit. But almost in the same breath, they're launching this large fundraising effort, presumably to fuel growth in their core standalone operations, which, as you noted, are actually growing, especially exports.
Exactly. If you connect the dots for you as someone watching this company, this isn't just a bad quarter with a big loss number. It looks more like a statement of intent. It shows how they're managing international operations, making tough calls to protect the core business. The key takeaway might be that this quarter, despite the headline loss, could actually represent a turning point. They've completed a major cleanup, and they're simultaneously securing significant capital for what comes next.
It definitely underlines the challenges of expanding internationally, doesn't it? And how critical it is to really understand the footnotes, the exceptional items in these reports. You have to look beyond the headline P&L number.
Absolutely. It's all about understanding the why behind the numbers, the strategy. And perhaps it leaves you with a question to think about. How might these kinds of strategic moves, taking the hit on the subsidiary, raising fresh equity, how might that reshape Borosil Renewables' competitive position and their long-term prospects, even if it means absorbing short-term pain?
A very pertinent question indeed. And that wraps up our exploration for today. We hope you feel a bit more informed, maybe better equipped, with the key insights from Borosil Renewables Q1 FY26 results. Thanks for joining us on the deep dive.
Keep digging deeper, and we'll be here to help guide you.